Welcome to the Furlo Capital Real Estate Podcast, where we dive into the intricacies, I can do this, of passive real estate investing. And our mission is to equip people to invest wisely in both residence and properties so that together we can build our wealth while improving housing. I'm James, and this is my wife, Jessie.
Yep, I'm here, and I was chatting with a little girl this week, and it was just so funny. Kids are funny in general, but she was telling me this story about how she loves snowboarding. It was so great. She actually even has a hill outside her house. She takes her snowboard out and takes it down. I was like, wow, that's impressive. And then mid-story, just instantly her whole mood changes. She goes, except when you get snow in your glove.
Oh, yeah.
That's the worst.
That is the worst.
I was just like, whoa, okay. That was a very dynamic story. Oh, and man. Wow, that makes you very mad.
So it's interesting. I just finished reading this book by Seth Godin, and it's all about strategy. And it's doing all this stuff. And then around chapter 268 out of 299.
Chapters or pages?
Chapters. He suddenly, which each chapter is like a page and a half.
All right.
But he suddenly switches to talking about money. Right in the middle of it. He's like, I know we're talking strategy, but I have some thoughts on money.
Time out. Let's talk about
So I'm going to share them real quick.
All right.
And so, similar to this girl where it was we're heading this direction, and then
E-break.
You go, okay. And then it was okay, now back to your regularly scheduled strategy. So I thought they were interesting thoughts, and I wanted to run them by you. So this chapter is called Thinking About Money.
Okay.
That's creatively whatever it is.
So this doesn't have to do with the whole premise of the rest of the book.
No. It is
weird.
just an aside.
Okay.
Wow. I don't know why he was I feel
but it was so important. Good that you drew out that piece of it.
It was thought-provoking.
Yeah. Okay.
Yeah. I highlighted 5 of the 14, but we're doing all 14. I can't help myself. Yeah. So here we go.
Of course.
They'll be good. We may do some of them quickly. So number 1 is the amount of money you have has nothing to do with whether or not you are a good person. Being good with money is a little like being good with cards. People who are good at playing cards aren't better or worse than anyone else. They're simply better at playing crazy eights. Yeah, which I thought was interesting. Total side note, I've been talking with my kids about hey, what hobby should I take up? And just the other night, Eleanor was like, Dad, you should, your hobby should be betting people. I was like, that is a hobby. But
yes, gambling is a hobby. Don't think we're going to do that.
It's pretty funny. She goes, you're usually really good at math. Yeah, I'm good enough at math to know I shouldn't do that. But
yeah, you're that is not a wise choice.
Yeah, super funny.
That's super interesting to me because it's yes, I agree with the sentiment that the amount of money that you have doesn't make you a better person, but you can have better strategies or better money management skills.
Yeah.
And therefore,
but that's his point, right?
Gain the benefits of it.
They're not inherent. There's no moral.
His point is you can learn it.
Yeah.
Okay.
Yeah. And I think it's also pushing back a little bit money is evil. It's no, it's not. It's just, it's neutral.
Interesting.
And you can be good at acquiring it.
Good at managing it, good at using it.
Who you are.
Okay.
Yeah. Number 2, money spent on one thing is still the same as money spent on something else. So he gives an example. A $500 needless fee on a $1 million mortgage closing is exactly the same or exactly as much money as a $500 tip at McDonald's, except the latter might change the recipient's life. Yeah. And so again, he's just wherever you spend it, which I don't know if I fully agree with 100%, but outside of just the pure mathematics of it is if you spend it, no matter what you spend it on, he's presuming it's not an asset of some sort. He's saying it's either some sort of expense. He's it is what it is. And so I think he's I'm assuming his goal is the goal is to minimize that or to be intentional about it no matter what it is. Or don't be upset about a certain expense. It's there. I would argue again, the mortgage fee does nothing to help your life.
Right.
But the McDonald's one, you get a benefit out of that too.
Yeah. I mean, I think it's more about the perspective that you have on money. And it's the relative worth of money does matter. To someone who makes a certain amount of money, $500 is a lot.
Yeah.
To another person, it's not. It is the same amount, but the inherent value of it is seen differently.
Okay. Yeah, I agree with that.
Yeah.
Number 3, if you borrow money to make money, you've done something magical. which is true. I do this all the time.
Yep.
On the other hand, if you go into debt to pay your bills or buy something you want but don't need, you've done something short-sighted, and it will exact a toll for a long time to come. This is interesting. Don't be surprised if you discover that many systems depend on us being short-sighted. Oh,
It's true.
I know.
So many things. Yeah. You need this now. This will be great now.
Yeah. And the system depends on that.
Right.
That's, I mean, in some ways, like getting a home mortgage or a car loan, like the entire industry is propagated by that. Now, again, one could argue you could buy a rental and you're making money. You could buy a car, which lets you go to your job or run a business, whatever. It's all good. But, which is why, but yeah, it's super interesting. I thought that was a good realization.
Yeah.
Number 4, getting out of debt as fast as you possibly can may be the smartest thing you can do with your money. If you need proof to confirm this, ask anyone with money to show you the math. Hint, credit card companies are likely to make more profit than any other kind of company in the world.
Wow.
Yeah. Which, yeah, I think that's right. Yeah, getting out of debt should be a priority.
Sure.
And though I was talking with a friend, he was like, hey, I have a potential here. I'm coming into a little bit of a windfall. He was like, how should I spend that? And he was like, I've got like, should I be paying off debt, like invested in something, blowing on a fun vacation? Like, what are your thoughts? To which I was like, blowing on a fun vacation, obviously. I said, I would actually, no, in a
Maybe
serious
a portion
answer,
of it.
I was like, a portion of it. Yeah, absolutely. And then I was like, and then it kind of depends, like, do you have a lot of debt? Where is your spending relative to your expenses? Like if you're pretty tight there, yeah, pay off some debt to increase that monthly margin.
Yeah.
If you're good and not feeling it, like, yeah, go invest it. It's all good.
Well, and the type of debt that you have matters. If it's high interest,
Yeah, that's true.
like, yeah, maybe pay some of that off. If it's leveraged and you're actually getting cash flow from it, like, okay, there's different ways to look at it.
That's good.
It totally, those last 2 points do remind me of an SNL skit from a long time ago.
Oh, I love that skit.
Where it's like, yeah, I think Steve Martin is in it. And it's like, okay, there's this new revolutionary way to think about your money. Like, if you step number 1, don't spend what
if
you don't have.
If you don't have the money,
don't spend it.
Yep.
It's so funny. Like, that's the whole, that's it.
That is, yeah. He's like,
But there's
it's
like
one
a whole
page.
plan, and then people
super
are just
easy.
like, so wait, let me wrap my head around this. If I don't have it, I don't spend it?
No, it's true.
But why?
Yeah. But what if I really
If
want
I really
it?
want it.
Don't got it.
No.
But what if I really want it and I have the money? It's like, then you should get it. Oh, cool. Yeah, it's great. All right, number 5. There's no difference in terms of the money you have. So there's no difference in terms of the money you have, like actual quantity amount, between spending money and not earning money. And there's no difference between not spending money and getting a raise, actually because of taxes, you may be better off not spending. If you got cable TV and a cell phone, you're spending $4,000 a year or $6,000 before taxes, which is a lot. So he's trying to make let me see if I can say it. He's saying like earning more and spending less from a net standpoint is exactly the same. And so for him, the point he's trying to make is don't necessarily focus on earning more, focus on spending less, which I will argue you can only do so much of that. You can only cut so much before you're like, I'm no longer happy. But, which I feel that way on the health standpoint where I'm like, I can only cut so many calories before I'm totally miserable. But in theory, I could exercise
Sure.
enough. It's just like those ratios don't work out the same. So I can't actually exercise enough to do it.
Yeah.
But to eat whatever I want. So I would argue like, no, there's something to be said about earning more. But I'm also like, yeah, there's probably for a lot of people, there's some low hanging fruit in terms of the expenses that they can get rid of.
Yep.
Which would be good. All right, number 6. If money is an emotional issue for you, you've put your finger on a big part of the problem. No one who is good at building houses has an emotional problem with hammers. Place your emotional problems where they belong and focus on seeing money as a tool.
That's good advice. It is emotional, not the money in and of itself, but often the positions it puts you in when you have it or don't have it,
Yeah.
And it's like,
I thought it was interesting. Dave Ramsey pointed out, he's a finance guy. He was like, most money problems are not actually math problems. They are like they're emotional, psychological problems.
yeah,
Though there is actually a very strong correlation between someone's financial, how they do, their wealth, and their math skills. So it's like, there's a little bit of correlation.
Really?
Yeah.
So if you're good at math, you're going to make more money?
You tend to manage your money better.
Okay. I mean, that kind of makes sense
Yeah,
because
totally.
accounting is like, it's math. So
Yeah.
Gotta
But
pay
most
attention.
most problems are emotional and like
Yeah.
communication problems with spouses. He's like, that's
Yeah.
like 99% of it. Yeah.
Yeah.
And that's what he's saying too. Just try to treat it as such. Number 7, like many important professional endeavors, money has its own vocabulary. It won't take you long to learn what opportunity cost, investment debt, leverage, basis points, and such costs mean, but it'll be worth your time. Yeah, and 100% agree. If you're listening to this podcast, you are investing in learning the language, the game of money, because that's what we talk about all the time on this. And
Yeah, we define terms all the time because often I
Yeah.
don't know them. So I'm like, wait, what is that?
were there any of those where you were like,
You rattled them off so
opportunity
fast, but I was like,
so
okay,
opportunity cost. You know what that is? That's a really important one, actually.
Yeah, I mean, it's like what you're giving up in order to do something.
Yep. And oftentimes we don't think about that.
Right.
Investment debt. You know what that is?
Yeah.
No, it's just investment. Sorry.
Oh, yeah. Putting your money into something that's going to
Yep. Debt.
give you back.
Taking out a loan.
Yeah.
Leverage.
Owing someone.
Sunk cost. Do you know what that one is?
I feel like that's similar to opportunity cost, except for it's like you've already done something. You've already committed to it. It's a sunk cost. Like you're not going to get it back. So you might as well like move forward.
Yeah, it's the idea
something
of
like
if
that.
you've already invested in something in the past, in theory, it should not influence what you're doing in the future. Like, for example, I remember the one that stuck me was when we were in college, they were talking about like if you're writing a paper and you're like 20 pages in and you're just like, this paper's just not any good. Like we will tend to keep working on that paper and keep pushing forward because we go like, oh, I've
invested
I've
so
already,
much.
yeah. And they're like, you're better off to just start all over and just trash it.
Say
and
that's a
that
sunk
doesn't
cost.
matter. Yep. It's sunk. It's gone.
Yeah.
What was the other one? I remember there was an example. The very first time I learned it was about a tennis court. It was like if you are paying, like there's an indoor court and an outdoor court, and you pay extra to play. Like you pay an extra fee to have the option to do the outdoor court. When the time comes, the question is, which court do you play on? And they're like, you will always. Like people tend to go, well, I bias myself towards the outdoor court because that's what I paid for. Like, well, if the weather's bad, no, you actually want to play on the indoor, and you can't even think about the cost anymore. That's a sunk cost. That like what you paid for that should not influence your decision. The only thing you should think about is like, well, which court is better right now, regardless of what I paid. All you did was you paid to get the option to have the choice, and I just take the choice as if you had paid nothing. Which is like that's so hard. To do.
Yeah,
it's so hard.
Well, yeah, we second guess ourselves all the time about, oh man, I shouldn't have spent that much.
Well, it's not necessarily second guessing. It's like we stick with things longer than we should.
Yeah, that's true.
Because
or we let it influence our decision.
Right. Yeah.
Because it seems like it should.
Yeah.
When in reality
it matters. But
doesn't.
that's like you got to be a weirdo in order for that to naturally do that.
Right.
I think.
Yeah.
Yeah. All right. Halfway there. And rate. Never sign a contract or make an investment that you don't understand at least as well as the person on the other side of the transaction.
Smart.
Yeah, which I think is smart for passive investors. Like our contracts with them are super straightforward, so it's not a big deal. But usually there's promissory notes and stuff like that. But yeah, I think that's good. That's an area that I'm not great at. I really have to focus and work hard to understand contracts and stuff because that's just not a natural thing for me.
Yeah.
Because contracts are lame, but it's partly that attitude that doesn't help me. But
yeah, well, and there's at this point there's just so much like legal jargon and fine print and covering your butt that it's like, oh my gosh, this is just it's exhausting to read. To get through it all.
Do those like terms of services that you have to accept?
Yes,
am I signing that contract? I don't know.
I know.
Yeah.
It's probably bad to admit that, but I'm like, scroll down.
I choose to believe in that we're all acting in good faith.
Yeah.
And every once in a while, especially with car rentals, for some reason, they do not act in good faith.
Yeah.
And I sign stuff and later go, what? Which, I don't know, like, what was I, not going to rent the car? Kind of stuck, which is super lame.
Yeah.
But it's not until something happens where I find out where they go, oh, wait. I also feel like insurance companies,
health
insurance,
that is what
do not act in good faith. But I don't
mind.
care. I choose to live my life as if every single one of them is acting in good faith.
That's right.
And I'm okay with that. I'm okay. I will get burned every once in a while.
It's okay.
Totally cool.
Majority of the time you
That's
don't.
a choice that I have made.
It's all right.
I'm all right with that. Number 9, if you've got a job, a steady day job, now's the time to figure out a way to earn extra income in your spare time. Freelancing, selling items on Etsy, building a side business, $200 extra every week for the next 20 years can create peace of mind for a lifetime.
$200 a week is a lot.
Yeah, it is. $800 a month. Yeah, that adds up. Exactly. That's his point, right? And he's like, yeah, if you got the steady stuff, don't necessarily spend your time on Netflix or surfing the web or the socials.
Yeah.
Ticking the talk. Is that a frame? I don't know. I got kicked off of TikTok. Yeah, that's right.
Ticking the talk.
I got kicked off, so I don't know what the cool terms are for that anymore.
Aw.
Yeah, I was too crazy.
Probably
for
because you
them.
didn't read the terms of service.
Oh, dude, probably. After
broke it.
After I got banned, I tried to read them and I was like, I don't understand what I did wrong.
I didn't do anything wrong.
And there was absolutely no one to talk to actually figure it out. It was so lame.
So sad.
Oh, so sad. But yeah, I think that's a great idea. How you get involved in. I think there's a lot of things you can do in real estate to kind of kickstart that kind of stuff. But yeah, a lot of cool stuff. Number 10, a small-time investor will almost never get rich by timing the stock market or with other opaque investments.
Okay.
You gave a
So you can't game the system. Is that what you're saying?
Yeah, I think so. I think it's just like some of those systems are just so large, you'll never actually get an advantage. And so stop trying.
Yeah.
Instead, do the side hustle thing. So.
Yeah, I mean, it makes sense. It's like anything that is going to be like worth the payout is going to take some hard work.
Right.
Like it's not going to be a quick dollar. It's not going to be easy.
Yeah,
you're not going
to
figure out the system and suddenly be like, oh yeah, I just get money every week. It's like, no, most things take hard work.
Yeah,
that's okay. That's good.
Yeah, I like that. Good takeaway. Excellent. 11. The way you feel about giving money to good causes has a lot to do with the way you feel about money.
Interesting.
Yeah, I thought that was an interesting one too.
The way you feel about giving away money to good causes says a lot of how you feel about money, like in general.
Yeah.
Interesting.
It wasn't about it didn't necessarily specifically talk about the amount, but it's just kind of your heart.
Yeah, like the heart or the thought behind it.
Yeah.
Which it's super interesting to me because there are different people who are like bent towards generosity or not, or, so I'm like, I don't necessarily think that those people have a better handle on how they think about their money.
Okay.
And maybe that's not what he's saying. He's just saying that how you feel about your money in that one area applies to everything. Or something. I don't know. It's an interesting statement.
I think maybe it's an idea of, I think it is back to that, like, do you have an abundance mindset or not? Or are you greedy or are you generous? I think that's it. Like, if you're willing to give money away, like, it's not the most important thing to me.
Yeah.
I think that's what I'm going for.
That makes sense. That would make sense to me. And it goes along with the other point that was in there about how money is a tool. It's like we tend to be emotional about it or like it affects our...
You tend to, jeez.
it affects our mood and
totally.
What we're thinking, and we stress about things, and it's like, okay, if I'm just looking at this, like the money isn't the issue. Like I'm in control of how I respond to it, like what choice I'm going to make later. The money is just a tool that I can use or not use in good ways.
Related here is number 12. I think you're going to like this one. I liked it. Don't get caught confusing money with security. There are lots of ways to build a life that's more secure, starting with the stories you tell yourself, the people you surround yourself with, and the cost of living you embrace. Money is one way to feel more secure, but money alone won't deliver this.
Yeah.
And we're Christians, and I definitely, that resonates with me. Of like, our security isn't in money. It's not in things. It's not in this life. Our security is in Christ and in a life a life afterwards from his promises. And like, that's where I get my security from.
Yeah. We could lose absolutely everything in this world and it's okay.
Yeah. And
it'd be hard.
And I think there's other regular things, right? Like he's talking about, the people you surround yourself with, just your mindset in general is where you get security. And money's not going to deliver it. So I thought that was just, good perspective.
Yeah.
13. Oh man, two more. Rich guys busted for insider trading weren't risking everything to make more money for the security that money can bring. In fact, the very opposite is starkly on display. The insatiable need for more money is directly and ironically related to not being clear about what will ultimately bring security. Like many on this path, now they have neither money nor security. Yeah, so just kind of an interesting one to throw in there.
Yeah.
But essentially he's saying like, if you're just chasing after money because you think it's going to, again, he's like saying, if you think it'll bring you more security,
Yeah.
which by the way, this is his entire book, how he writes. It's kind of, it's an iterative type of thing. He'll say like 3/4 of an idea and then he'll overlap that idea with another one and extend it a little bit further and then
Interesting.
and overlap. And so each one individually, you're like,
Okay.
that wasn't a full thought, but I see how
Yeah,
they're all kind of weaving
builds and
together.
connects with
By the
each
time we
other.
get to the end, you're like, I think there was a full thought in there.
Yeah.
But yeah.
Makes sense.
But yeah, so anyways, I think that's what he's getting at.
Yeah. Well, and thinking about the motivation behind why you're pursuing a higher income or even saving, it really does all go together, because it's kind of like, what's your perspective on money and how do I view it? Do I view it as a tool? Do I hold it loosely? Am I emotionally involved in it? And then what's my motivation? Like why would I be pursuing a higher income?
Yeah.
Or why am I pursuing paying off my debt? It's like, is it to feel that security? Is it to look good? Is it?
Yeah. And I think it's good to ask yourself those kind of questions and really like, what am I doing here? Why am I doing it? I think that's good. Yeah. And being honest. And it's probably even healthy to say, I'm going to start from a negative view of this. I'm going to assume the worst of myself just to game that out. Why am I pursuing a business? Oh, is it because I'm insecure? Is it because I'm afraid of something? Is it because I don't feel like I have enough?
Or even to look at both extremes,
okay.
To be like, okay, what's the super altruistic way to look at this, and what's the worst case scenario? And it's like, okay, I'm somewhere in between. Where do I fall here?
Yeah, and just really being truthful about it.
Yeah.
I think it's probably the biggest thing you can do because then you can actually move forward.
Yeah.
Last one. All right. In our culture, making more money feels like winning, and winning feels like the point. Yet, within very wide bands, more money doesn't make people happier. Learning how to think about money, though, usually does. So he's saying in our culture, making more money is like, yay, that's how you win. He goes, but in reality, like that may not necessarily be true because, once you kind of hit a certain threshold, like you're actually happier. But if you understand these 14 principles plus just other really good basic ones, that will actually make you more happier. If anything, it's because you just better understand the rules of the game and you can play it better.
Yeah.
Yeah, so these are they're not your normal like spend less than you earn.
Yeah.
They're not Dave Ramsey baby steps. They're just more like
More conceptual.
yeah. Which again, that's
Perspective.
how he writes all of his stuff, and just kind of so that's why I thought they were interesting thoughts because you don't normally
Right.
hear.
Yeah, you
these
don't normally
types of-
dissect that. It's
Yeah.
Normally
So if
based
I
on
had to
amounts
boil it
and-
down to very simple terms, he would go: money is a tool. Learn how to wield the tool, whether that's like learning how it works, learning the language around it, the rules of that game. I think that's a big one. And don't make it more important than it is. Like again, it's kind of like don't rely on it for your happiness, for your security, for your own worth. There's other more important things. And at the same time, again, like learn how it works so you can play the game well.
Yeah.
And
because the reality is money does provide good things, and comfort, and it does provide certain amounts of security for your family and taking care of them. But
if you make it your ultimate thing,
right,
you'll ultimately crumble and
Yeah.
it becomes a problem. So it's that balance.
Yeah.
Gotta give it.
Is it caring for your family that's most important, or is it making the dollar amount that's most important? And there's a tension there.
And that's why I like working with a lot of our passive investors because I feel like we strike that balance of, you know what, building my wealth is important. And I do want to help out society, but I also don't want to devote my entire life to doing this because I have other stuff that's more important. Like, sweet, here's where I can come in and help out with that.
Yeah.
And so that's why I like it. Anyways, those are some thoughts. I thought they were interesting.
It was good.
Would love to hear your thoughts in the comments. about how they, if any of them resonated with you from this. And if you would like to learn more about investing with us and what it looks like to pursue some of these money goals and how to do it, we would love to do that with you. You can check us out at furlo.com. So with that, thanks for listening. Have a great day.